Welcome back, folks, for the end of session markup for August the 3rd, 1st, 2023. So let's get right to it. If you looked at my pre-London session, you will get to see all the POIs that I was interested in. There was a trade today, which I did take, but unfortunately it took me out for a break even, and I'll explain how that happened, because I had a bigger stop loss and a wider range than I typically would, just to get involved into a trade. And it happens sometimes, not getting tagged in for a number of days, and the price to leave without you could get frustrating. But in today's case, if I had kept to my original 25% on the extreme pivot, it would have been a perfect entry with a very easy high or return. But I didn't. I took the range, broke even with my typical rules, and then it, the trade returned back and it took me out for a break even. Nonetheless, we'll look at it in detail. But what do we have on the 4H? This is our daily breakup structure, but also our 4H. We are in a complex pullback all the way down to the extreme of this 4H swing leg. So what does that tell us? Let's visit the daily. So at this point in time, like I said, 4H boss is also a daily breakup structure. We had the pullback. And then it reacted to this demand zone. There is a demand and orders sitting in this long wick of this candle on the daily. You could see that with a massive reaction, came back, gave us an internal breakup structure, and now it's falling again. So it could be that now this low is ready to get run, and this is a protected high, right? Because internal high. So unless this does not break, internal is in a bearish order flow, and it might stay bearish until we come to this extreme demand on the daily, at which point we reassess if the price wants to go up and break another structure here, or if it's going to break this protected low and turn bearish completely. Okay, so this is exactly what we're seeing on the 4H. We came in this morning at about 9, right about here. Not going on much here. The internal massive swing pullback, right? We had this was the reaction that we saw coming in from this 4H zone. So this was the wick on the daily that I showed you. We have a good reaction on it, and then internally we had turned bearish again with this internal breakup structure. 1H boss here, and then obviously the internal boss here. So the internal is definitely bearish, and it is bearish because we went up, we broke this level, came out, went back up, and then again broke this level, right? So let's look at 1H and see what opportunities did we get. So remember, we have turned bearish, right? Both for 1H we are bearish, and for H internal we are bearish. So that is what I have marked here. This is my protected high. 1H strong high and 4H internal strong. We have that extreme 4H zone, and then the refined pivot on the 1H. Oh, sorry, not the pivot, but the flip on the 1H. And then we started having this pullback, right? So when we had this pullback, look at this. The pullback happened to the EQ of this range, right? So if you wanted to play, let's say we had a 1/8 chalk at this point in time, right? At this point, which gave us a new supply over here. Now this new supply, if you got tagged in immediately, that would have been a valid buy, right? Because you are trading counter internal, you're trading counter 1H swing leg, and then the only thing that you're trading pro is the 4H, but everything is counter, right? So if you were having a zone marked here and waiting for it to come and then buy, at this point in time, after it has gone and reached the equilibrium, the probability of this zone holding after it mitigated the EQ is fairly low. But if you got here, went back in, tagged you in, and went high, that would have been a good trade because you haven't mitigated. It's still part of the pullback. Aggressive, but still part of the pullback if you do want to play counter, right? So now, when we came in yesterday, we had marked this zone here, and today, how did we play this out? I'm going to zoom this a little bit. We came in at about at this point in time there. So we came in here, we have this zone marked out, this right here, 1H zone, because it was responsible for this break of internal structure. So it is responsible for some break of structure, and 1H is it's a pretty large time frame compared to 15-minute and 1 minute, right? So I normally take these zones as valid zones that I want to really monitor how price action is developing within those zones. So when price fell, it reacted. Again, look at it, what it's reacting, right? It's reacting to sell to buy wicks. There is no solid zone like this bear candle, then followed by a bullish engulfing candle, right? So this for me, solid candle bodies are high probability POIs for me, like this zone right up here. But these small sell to buy wicks on the time frame that you're looking at is reaction points, but I wouldn't call it like the key elements that I'm monitoring very, very closely, right? So this reaction point is just to facilitate this pullback into this 1H supply zone, right? So once price went into this 1H supply zone, I immediately dropped down to my 15 minutes time frame, and I started looking at the price action. So this is the 1H supply, and we had a dropout, and price started coming up again, right, on the 15 minutes. So 15-minute turned bullish at this point in time. And it left us perfect equals here. So, right, so again, double top, however you want to call it, but there is definitely liquidity over there. We swept all of that liquidity, and then we had a massive drop, a very aggressive V-shaped reaction. This was the last supply that was responsible for taking that liquidity out. And then after that, I was just waiting for price to tag us in. Now, where I failed was let me show you my trade. So this is where I entered on the pullback at this point in time here. And I was just targeting, a simple 2R, right? There. So, and the opportunity was definitely, 5R, even with that massive of a stop loss. So 13 pips, 15 minutes, that is okay, right? You start talking about massive stop loss when you're going 15, 20 plus, but I would like to rather stay under 10. But look at this. I would have typically marked, so this part here, in fact, let me get this out of the way. This is my entry, right? I marked it on this entire range instead of just this pivot. Typically, I would mark it on this pivot, and then I would set an entry right on the 25%, put my stop loss right above. So this is 5.6, so I'll call it 6, just 1 pip, and then let my trade run, right? So at this point in time, I would have been break even, right? And I still would not have probably gotten stopped out. Maybe spreads might have stopped me out, but still there was a chance that this would just drop again. And at that point, if I had a stop loss like this, then from a 5-hour range, if I look at it, we came all the way down to what now? 13-hour, right? So obviously the size of your stop loss matters a whole lot, but how are you deciding where would you want to, and you want to be as mechanical on this as possible, right? Are you going to pick the range? Are you going to pick the pivot candle? Are you going to pick the flip? Are you going to pick the flip which has been swept, right? Because there is liquidity behind that flip as well. And there are many different criteria, but pick one which you think gives you and your trading style the highest strike rate. In my case, I've been getting in the past so many days a lot of no tags with this extreme and 25%. So I've been experimenting again to kind of take the entire range, take the edge on this. But today, if I had taken the 25%, it would have been a perfect play. But instead, I had my trade at the range, and then I took it on the 25. On the extreme. Why is this not moving now? Yeah, I took it on the extreme. Not even there, right there. And at that point in time, it was, after I broke even, I knew price could go back in, and it did. But typically also many times it happens, just price falls, comes back, and then just keeps falling. It's, again, one of those days, a very, very clean setup. We had liquidity above these highs. Equal highs. We had a nice V-shaped reaction. We had the last demand fail. And then we had the entry model ready. But a break-even day for me today. All right, guys, we'll talk to you tomorrow with the pre-London analysis again. Take care. Bye-bye now.